I'm Suzy Dukelow. I'm with Mason-McDuffie Mortgage. You're here because you're thinking of buying your first home. Hopefully, our guide will help make this process a little bit easier for you. What I hope to leave you with today is to help prepare you for the purchase of your home, to understand the process and really what to expect from today through the day that you close escrow on your home, and to hopefully make it less stressful and a lot more fun. I work for Mason-McDuffie Mortgage. We're partnered with East County Schools Federal Credit Union. We handle all the first trust deeds, those are the home mortgages for East County Schools. Mason-McDuffie has been in business in one form or another since 1887. We have an outstanding reputation in the industry for making fast loan approvals and providing superior customer service. I have a great team that works with me, and you're talking to somebody that you know. If you need something, you call me and you call me directly, and I'm the one that's going to help you from the very first call through the final phone call. You're not talking to a call center, leaving voicemails, or not getting your help that you need. Also, because of our strength and time in the business, Mason-McDuffie has a lot of great relationships that allow us to offer a variety of loan options that may not be available to everybody. The biggest benefit to homeownership, well, that's a safe, warm place for your family to start and to grow, and it gives you the freedom to stay there as long as you choose. You're going to pick a school district that you'd like for your children to learn from and be able to have the control to stay in your home. If you want to have your kids in the same district through high school, you've got that ability because you own this home. You're not going to be forced out because the landlord has decided to sell the home. You also have an excellent opportunity to build equity with your home with home ownership. What is equity? It's one of those words. There's all these words in the real estate language that are most people don't know. Your equity in a home is the difference in between what the home is worth and what you owe. And typically, your home value increases over time and you pay down your mortgage. I've included a chart here that shows you the historical median home value for San Diego County from 2017, where it was in the mid sixes, all the way up to the fall of 2025, where our median home value is in the mid nines. So as you can see with this line that steadily moves up, this is how you're going to increase your equity and make a nest egg of your own with your home. Now, do keep in mind, I can't guarantee you're going to make money on your home that you buy. Nobody can. But you're going to have peaks, you're going to have valleys, as you can see on the chart. This is very, very typical. I kind of figured when I bought my home, I was in my mid 20s, and I'm going to be a homeowner till I die. So I've never worried about the valleys because let's say I bought high and I sold low. Well, then the next home I'd be buying low, and those peaks and valleys are going to repeat themselves. Nothing to worry about. That's just part of the business. What are the steps for home ownership, you're wondering? Well, the first step is me talking to your loan officer so that we can determine what is the right price range, what can you afford, what can you qualify for. We're going to have a conversation and take a loan application in the pre-approval process. Once you know what you can afford and what you can qualify for, then it's time to talk to a realtor. And once you've found the right realtor, you're going to start searching for your ideal home. The pre-approval process, we're going to review your income, your savings, and your credit. The income portion is really what is the most that we can qualify you for. I took a loan application on a first-time buyer this past week, and they are they don't want to have a payment higher than $3,200 a month. And what they've got to do is they could qualify for a payment much higher, but they don't feel comfortable with that. So we're going to discuss both what you qualify for and where is your comfort zone. In your savings, we're going to talk about how much you're going to need, how much you have available for a down payment, and educate you on what closing costs are. Closing costs are the additional monies that you're going to take out of pocket that are going to cover both the one-time charges associated with the purchase of your home, but also setting up a potential impound account to pay your taxes and insurance on a monthly basis with your mortgage. And a real important component of the pre-approval process really is looking at your credit. How have you managed it? And if if you have credit problems, that's not the end of the road. But if we're looking at maybe you're buying in 6 months or 12 months, we can look at what we can do to help fix that credit so that you will be able to buy that home in the future. On the income, there's different components, different jobs that you have, different ways that you pay. If you are a full-time salaried employee, we are going to use your current salary. We're going to need your pay stubs for the last 2 months and your W-2s for the last 2 years. If you're paid on an hourly basis, we're either going to look at what is your year-to-date income. We're looking for a 12-month average of what your income is. One way around that rule, however, is if you have gotten pay raises, the average doesn't work to your benefit. But if we can verify that you guarantee work 40 hours per week, your employment verifies it, your pay stubs verify that, then we can use your current pay rate, which does help us boost the qualifying income. If you're counting on bonus income or overtime or commissions, you have to have earned those the last 2 years, and we have to be able to verify that. And we'll use a 2-year average of that income. If you're self-employed, we're going to need 2 years tax returns. If you have a corporation, we're going to need to have both business and personal tax returns for the last 2 years. You can also use pension, disability, retirement. Those are all viable sources of income. Now, let's talk about where you're getting the money for the down payment and closing costs. If you're using your personal savings and you've got ample funds in there, we need to see 2 months bank statements. We need to see that the money that you're planning to use for your down payment and closing costs has been in the bank for 2 months, that it wasn't a recent deposit. So I want to see bank statements with the full amount that we need that's on the both months that we can verify. If you don't have that, there are other ways to come up with money. Maybe you're fortunate. You've got parents, brother, sister, grandma, grandpa, an uncle or aunt, a family member, a relative is a viable donor for down payment. They can pay down payment and closing costs. You could actually use zero of your own funds if you have a gift from a family member. Don't just have them transfer that money or give you a check and put it right into your bank account. If you're going to be using gift funds, talk to me. It's so important that the money does not just show up. We have anti-money laundering rules from the federal government that we have to comply with. So any money that just shows up in a bank account is an issue that we have to verify. So I will give you a gift letter that you will have mom and dad or whoever fill out, and we may only need the gift letter and no other verification. And we may need a bank statement, depends on the loan that we're going with, but it's an easy process, and I'll hold your hand and help you through that really easily. Some people sell assets. I've had people sell cars to come up with the money for the down payment. If that's the case, what we need to do is see the pink slip, the bill of sale, a copy of the check, and then proof that you put that money into your bank account. I once sold a home to somebody many years ago. They were a first-time buyer, and the guy had a matchbook collection, and he had collected matchbooks from all over the country. And when I started the loan application, I'd asked him, what assets do you have? And he mentioned he mentioned this collection. It was on the loan application. So we were able to use it because he disclosed it up front. We were also required to get an appraisal. He had had an appraisal on this collection. He sold it. We got the bill of sale, got a copy of the check, and proof that he put that money in the bank. So that was a great way for him to come up with his down payment money. If you've got a 401k, you can also sometimes take a loan or an early withdrawal without penalty. Talk to your 401k administrator to see what your options are with that. We have down payment assistant loans that can help you with not only the down payment, but the closing costs. Big no-no though is cash. If you've got $10,000 hidden in your mattress or stuffed in the closet somewhere, get it in the bank so that it is in that bank account for 2 years or 2 months, excuse me. We cannot have cash on hand. It is not an acceptable option. It goes back to that pesky money laundering law. With your credit, good credit is important. Who wants to loan you money if you're not paying your bills on time? So FICO scores are a good indication of how you handle your credit. And with most loans, you're going to need a minimum of a 620 for the mid FICO score. We do have FHA, which allows us to go down to a 580. And if you're looking at a down payment assistance program, a 640 is a minimum FICO score for most of those programs. Basically, what we'll do when we're going through the pre-approval process is I'm going to pull your credit report and look at what kind of credit cards you have. If you have payday loan, stuff like that, is not a good credit thing to have on your credit report. It's a great idea to have 2 to 3 open and active credit cards that you use and pay on a regular basis on time. If you're using your credit cards and every month that balance shows that it's going up, that's going to drop your credit score. That's a kind of a red flag that you're living above your means. So not only am I going to be doing this, but the underwriter, the person that gives the loan approval, they're going to be looking at how you handle your credit. So this is important, and especially important if we're looking at, we've got a year where we can, you're not going to buy for a year. So let's look at what best practices we can put in place so that you can get those credit scores up and we can help you to get into your home. When you're applying for a loan, one of the first questions people ask me is, well, what's the difference between being pre-qualified or pre-approved? Pre-qualification to me is a conversation. You call me up, I ask you your income. I'm not asking you to send me anything. We're having a conversation. So you tell me, what is your income? I'll ask you, is it salary? Is it hourly? How many hours a week do you work? You might, quite often I'll have a couple that'll call and they'll say, well, we earn, $7,500 a month. Is that individually? I need to know for each person, I need to break everything out. And then, somebody will say, well, I make $5,000 a month. And that includes my overtime. Well, do you work your overtime for 2 years? If you don't, we can't count that. So I'm really going to, in our conversation, try to break down so that I have the most accurate picture of what your income is. When we're doing a pre-approval, you're going to need to verify it. You're going to prove it. I'm going to ask you to provide your pay stubs, your W-2s. I'm going to examine your pay stubs and look at are you working the 40 hours a week? Do you have overtime there? If you have overtime there and you regularly work it, and it is likely that you're going to continue working overtime, then what I'm going to do is verify. We'll do a verification of employment to show a breakdown of how much you've made in the last 2 years in that overtime. So with the pre-approval, once you've sent me your bank statements, your W-2s, and I have a completely accurate picture, I'm going to run an automated approval. I'm also going to pull your credit report at that time. And I'm going to run an automated approval where I will know that your loan is an approvable loan and you're ready to go out and start shopping for the realtor. So how do you find the right realtor? And what does the realtor do, really? The realtor is going to represent you in the purchase. They know the laws, they know the business, they know what to look out for to make sure that your best interests are always being looked after. They're going to find the right home that meets your criteria, schedule the tours, write your offer, and negotiate on your behalf. How much does it cost to hire your own agent? It doesn't cost you anything up front. Part of the negotiations are who's paying the real estate agent. Um, it has changed a little bit where sometimes the buyer might pay a lower price for the home and be paying the commission, but I just don't see that. It's pretty rare. Usually we're seeing that the seller, when you're paying the price, this is all part of the negotiation, and that's all broken in there so that you don't have to put down extra money to pay a commission for the agent. Sometimes people have called me after they've gone into an open house and they said, "Yeah, the guy there was really helpful, and he was asking if I worked with an agent and should I try to use him and save some money?" Well, keep in mind that the guy who's opening or the lady who's holding the open house is the listing agent, most likely. That means their number one priority is representing the seller. While he could write up an offer for you, he's writing up an offer that is hopefully got exactly what his seller is looking for and not necessarily in your best interest. So having your own agent is a very wise decision. I recommend working with a local realtor, not, the friend of your uncle who lives in Northern California. He might be a great guy and he might be a great realtor, but he's not a known commodity to the agents that you're trying to get your offer approved with. And using an expert in the area, they're just going to know so much more and be a lot more valuable to you. So how do you find them? Ask your mom, dad, brother, sister, families, friends, coworkers. Ask anybody that has gone through a home purchase or sold a home recently, and who are they happy with? That is, I think, the best way of getting a realtor is word of mouth and personal referral. If you have your heart set on a certain neighborhood and you see one realtor has got 4 or 5 signs in that neighborhood, that means that they have probably been working in that neighborhood for quite a while, several years, and they have earned the trust of the people that are continuing to use them as their neighborhood expert. So that's another great way of finding the right realtor for you. The next step is have a conversation with me. Give me a call. We can set up an appointment. You can text me, you can email me, but right now take out your phone and take a picture of this screen. It's got my email address over here. It's got my phone number, and I am here to help you. We can do this all right on the phone, and everything we do is through a secure network. But give me a call. Let's set up an appointment to get you started on your way to homeownership. Thank you for spending your time with me today. I appreciate it, and I'm here to help. I look forward to working with you on your home buying journey. Thank you so much. Bye-bye.